protecting your investments and building a long-term mindset. Congratulations! If you've made it this far, you've already come a long way. You now know what investing is, how money grows, the types of investment available, and how to get started. But there's one more critical step before you become a confident investor, and that's learning how to protect what you built. Because it's not just about making money. It's about keeping it, growing it, and developing the mindset that helps you in long term. Why protection matters. Here's a truth every investor learns eventually. Markets go up and markets go down. No matter how good you are or how smart your strategy is, downturns are part of the game. The best investors don't avoid risk. They manage it. Protecting your investments means having systems, strategies, and discipline that keep your financial future safe, no matter what the economy is doing. Let's go over the best ways to do that. Diversification, your first shield. You probably heard the phrase, don't put all your eggs in one basket. That's the foundation of diversification. Spreading your money across different assets so one bad investment doesn't ruin everything. For example, if stocks drop, your bonds might hold steady. If real estate cools off, crypto might be booming. If one company fails, dozens of others in your ETF still grow. Diversification doesn't guarantee profits, but it helps smooth the ride. Think of it as a financial safety net, reducing risk without limiting long-term growth. A simple way to diversify. Combine stocks, bonds, real estate, and crypto in your portfolio. Mix different sectors, technology, healthcare, energy, etc. And spread across countries and regions, not just one market. The more balanced your portfolio, the stronger it becomes. The power of time and patience. Here's the secret most beginners miss. Time is your biggest asset. The longer you stay invested, the more powerful compounding becomes, and the less individual downturns matter. Markets may drop in the short term, but historically, they've always risen in the long term. If you zoom out, every crash, dip, or correction becomes just a small bump in a bigger upward trend. So when prices fall, don't panic. Instead, remember this, volatility is the price you pay for long-term growth. Every market drop is an opportunity to buy at a discount. If you stay calm and stick to your plan. Patience isn't just a virtue, it's a strategy. Rebalancing. Keep your portfolio in check. As your investments grow, your portfolio's balance can shift. For example, if stocks rise faster than bonds, suddenly you might have 80% in stocks and only 20% in bonds. More risk than you planned for. That's where rebalancing comes in. Rebalancing means adjusting your portfolio back to your original targets, usually once or twice a year. You might sell a bit of what's grown too much and buy more of what's lagging. It's like trimming a tree, so it grows stronger and healthier over time. Rebalancing helps you stay aligned with your goals and risk tolerance, automatically buying low and selling high without emotion. Avoid emotional investing. Here's one of the hardest lessons to learn. Your emotions are your biggest risk. Fear and greed can destroy even the best investment plans. When markets crash, fear tells you to sell everything. When prices soar, greed whispers, buy more you can't lose. Both lead to bad decisions. Successful investors do the opposite. They stay calm. Think long-term and make decisions based on logic, not headlines. If you ever feel emotional about money, take a step back, turn off the news, review your plan, and remind yourself why you started investing. Remember, investing is a marathon, not a sprint. Emergency fund and insurance, your safety net. Even the best investment plan can fall apart without protection in your real life. That's why every investor needs a financial safety net. Your emergency fund and insurance. Your emergency fund protects you when life throws surprises, job loss, medical bills, car repairs. Without it, you might be forced to sell investments at a bad time just to cover expenses. And don't overlook insurance. Health, life, and property insurance keep you and your loved ones financially secure. Think of them as armor for your wealth. Investing works best when your life and money are protected. Long-term mindset. Thinking like an investor. At the heart of everything we've talked about lies one thing: mindset. Investing isn't just about numbers. It's about how you think. Here's how great investors think differently. They see dips as opportunities, not disasters. They focus on the process, not quick results. They understand that slow growth is still powerful growth. Your goal isn't to get rich overnight. It's to stay rich for life. That's the mindset that builds generational wealth. It's about confidence, patience, and consistency, not luck or hype. When you master that mindset, markets no longer control your emotions. You control your future. Review and final thoughts. Let's recap the 5 key parts of this entire beginner's guide. Part 1. What is investing? The foundation of how money works. Part 2. How money grows. The magic of compounding and returns. Part 3. Types of investments, where your money can grow. Part 4. How to get started. Building your first plan. Part 5. Protecting your investments. Managing risk and mindset. You now have everything you need to start your journey toward financial independence. Remember, investing isn't about predicting the future. It's about preparing for it. Start small, stay consistent, keep learning, and let time do the heavy lifting. Step 9. Keep learning and stay patient. Once you've started, the journey doesn't end. It just evolves. Markets will go up and down. You'll see headlines saying recession or crypto crash. Ignore the noise. Focus on your plan. Keep learning. Read books. Watch educational videos. Follow credible finance creators. The more you understand, the more confident and calm you become. And most importantly, stay patient. Wealth grows slowly, then suddenly. Small, consistent steps will take you farther than trying to get rich quick. As the saying goes, the best time to invest was 10 years ago. The second best time is today. So whether you're investing for freedom, security, or a better future, start today. Because the sooner you begin, the more your money and your mindset will grow. Thanks for joining me on this beginner's investing journey. If you found this series helpful, make sure to like, subscribe, and share with someone who's ready to take control of their financial future. Your journey has just begun, and your future self will thank you for it. Thanks for watching. Like and subscribe for more.